Hello, welcome to another Hershey Financial Advisers information and economic update. So today I wanted to just talk. We had this is now a little over 2 weeks past the election, and I just wanted to give a observation of where we're at and what we see and what we're paying attention to happening in the next 3 to 6 weeks to 6 months, and maybe even 2 years. So at this point, obviously Trump won the election and pretty handily through the swing states. We're not going to get into analysis of why that might be or might not be. There's plenty of news outlets covering that right now. What we do want to talk about is how that affects our clients, the economy, and then obviously how that feeds down to you and me, our clients and our community, and what that means for our financial future. So the first thing I want to talk about is that as you look at what happened, what has been happening during COVID, before COVID, go back the whole way to 2008, and really the last 30, 40 years, leading up to the current cycle, and now that Trump won, what that might mean going forward. And so I want to just talk about some basic information that we know, kind of cover that history a little bit and say the things that we're paying attention to, and also just kind of paying attention to things that might not be brought up in the mainstream media and the financial press. So if we go back, we know that in the 70s we had inflation before, some oil shocks, just economic cycles. There's a bunch of reasons. We had high inflation. Volcker came in and brought up, we had one wave, 1974, pretty good recession. We turned around, the Fed turned around and brought rates back down to mitigate a deeper economic downturn, and inflation popped right back up again. During that time, into the early 80s, Volcker was the head of the Fed at that time, basically decided that we're going to end inflation for once and for all, and we're going to drive rates up to 20%. When he did that, he did break inflation. I mean, we know now looking back, that it worked. It was painful. I don't think he was very popular at the time because he created a recession, and but that moved interest rates down over the next 20, 30 years. And they continued to go down once we had the financial crisis of 2008. So it was first the tech bubble of 2000, brought rates down to get the economy going again, down to 2%. Then during the great financial crisis of 2008, that we brought them down to zero. We, the federal government, the Fed, brought them down to zero to get the economy going. There also was a lot of money thrown from the federal government into the banks to get the economy started and to basically mitigate the losses from residential housing and bad debt in individual businesses and all the things that happened during a recession, but were way worse during that recession. And so the interest rates being low drove up all the asset prices, including residential housing. And then also we don't know when the end of a cycle is until after it ends, but the cycle was fairly long by historical standards before we turned around and had the reaction by the federal government in light of COVID and the response to COVID and people being told to stay at home, and the reaction to that. And the money this time, instead of going into the banks, it went directly to the U.S. consumer and to the employers to continue to keep jobs. That created inflation. And that's partly how we got to where we're at now. That inflation's coming off. Government spending has been high. And so here we are. Trump wins, partly because probably, if we stick to just the economic reasons, probably partly because people really did not enjoy that inflation, never experienced that inflation before. They would have been kids, most of the people in the primary earning years and voting years, and not really remembered, the overwhelming majority of people remembering what it was like to live through the 70s and early 80s with inflation. I think what's important also to understand this is to understand that we had a Trump administration, and what he did during that administration period might not be completely the same as what he does during this administrative period, because there was pre-COVID and now there's post-COVID. There was inflation that was the major story towards the end of his office, and then after he left office. And so I'm just going to talk about some general themes, but one of the things I think is super important that we're paying attention to is the national debt and deficits. My clients that have known me a long time are probably know this is a topic that I talk about a lot. It's a personal concern in my entire life. I am concerned as Americans that we have lived in this period where we are consuming our resources beyond our generation. That's me. That's our parents. That's most of us that are listening to this. And the concern for that is that we're absorbing economic spending and resources that would be better balanced out over our next generation and the generation after that. And I'm not even really talking about the environment. I'm talking about the economic checks and balances and the economic flows. So our Social Security, our medical expenses, our services to ourselves and the people around us and our community, we are overspending. There are good people doing good work. The way I would look at this as, and I think this is a really important part of this discussion, is not to take out the human factor of the people that are doing the work that we might not be able to pay to do the work. So if you go back in the 1800s and look at an English manor, country manor, you have lots of jobs that's employing, and those people are doing important jobs, serving the people of the manor. All right, they're needed, they're wanted. The manor can't function without them. However, if the manor's not bringing in enough money, you can't afford them, and they're going to have to be let go, and the manor's going to have to shrink, or they're going to have to move, turn into a museum, whatever. You can't afford it, you can't afford it. It's that simple. That is not the way the United States has been operating. And I think this is a really high-level discussion that needs to happen. And it isn't happening. And my concern is that at some point we're going to have a financial crisis that's going to require it. And so the opportunity to have this discussion is now. Probably in this next administration or the following one, we're going to have this discussion about current accounts, what the United States brings in versus what it spends. And I think if we're really looking at this in an unbiased way and looking at what's on the table, we have to come to the conclusion, or there's a high probability of an argument coming to the conclusion that we have to do probably some spending cuts as well as some revenue generation or raising taxes somewhere. I think we're past the point, based on the size of the government, that we can just do this with spending increases, with revenue because of the economic growth. That's obviously a political discussion. But I do believe that possibly for the first time, we will have spending cuts. The tariffs and putting trade barriers in place, or the threat of that, is inflationary, but spending cuts is deflationary. I don't think that's being talked about enough. I'm not sure of all the reasons why. My entire life, I don't feel like that's been talked enough about. I think everyone kicks it down the road of letting the next generation deal with it because it's a really complex issue. But I think we're getting closer and closer to where we're going to deal with it. And I think that right now what's very fascinating to me is that the analysts, the economists, the pundits are not suggesting that Trump actually is going to cut anything. He's just going to increase tariffs and spend more, and that's inflationary. And they're not really counting in the deflationary effects of cutting the federal government because they believe that that's not possible. Forget the politics of Republican or Democrat. If in fact we cannot stop the spending of the federal government, when we look at how much money is being spent and how much money we are spending on covering our deficits, that's a problem. That's a problem if we want to be the reserve currency. It's a problem for our future, for our kids and our grandkids. So I think I think we need to look at this next administration and the administration after that, and possibly the third administration, but I don't think we're too much past that before this problem needs to be addressed. And so for that, why do I bring that up? I think if we actually do cover that, it's something we've never covered before. We've never had a reduction in federal government spending, and that will trickle through the entire economy. So we believe that we have the ability to have a shock with a long-term, possibly better outcome when somebody actually does address this issue. And a shock, I mean markets get hit, asset prices go down, and chaos. Things that not complete chaos where you have a riot in the streets, but definitely instability in asset prices. And I think that's not really being seriously evaluated. And so we are cautious. We're optimistic. Longer term, if that gets addressed. If that doesn't get addressed, then we just are addressing that down the road. So in the short term, we're going to be paying very close attention to that. That is the big unknown. And I think that's a really important aspect of understanding what happens in this next administration. They say they're going to do it. It wasn't talked about as much during the election. Since Trump won, they're now talking about doing this. If they do it, we want to be really paying attention and be prepared for it. Because I do not see real, honest discussion about what that looks like. Again, in the short run, 3, 6 months, year, or 2 years, it could be pretty ugly, like uglier than COVID, because it's not going to be the government coming in and spending. It's going to be a loss of revenue going back into the economy. But if it does happen and it happens properly, it could be better long term. So it changes that dynamic. So that's something really important we're looking at. We're going in with high asset prices. We're going in with high residential housing. We got commercial coming off, but it's still fairly high historically. So we are very much paying attention to that aspect and what happens to the economy, what the Trump administration does. We're paying attention to it daily, weekly. So I know a lot of people are excited and think that that's going to be good for the economy. They're not sure what that means socially for them. They're not sure what, obviously half the country is divided. Half the country is happy about Trump. Their half is not happy about Trump for whatever reasons. But what I'm talking about right here is purely economic. And the economics of what happens and how we manage our money, how we play defense, how we play offense, how much risk, how quickly we are to make adjustments. That is super important, and we're paying attention to that. So we don't believe you want to get too far out over your skis in this environment at this time, and that could change 3 days from now. But as information goes on, and as we gather more information, I think it's important to pay attention to what these decisions that the new administration is talking about making, and what they mean for your money and for us and for the economy, and in the short term and the long term. So that is where we are right now in our thinking and our observations and our concerns. And I would say the biggest concern is we're not hearing enough of the financial community talking about possible outcomes. I did hear for the first time in a long time a word that I was expecting to hear: bond vigilantes, and which means that the bond market is not going to just allow rates to go down when our spending's too high, and they're going to demand that we pay attention. The federal government pays attention to spending, or the rates won't go down. But again, that's only relative to tariffs and spending. They're not counting in the deflationary effects of a true government reform. And the reasoning is the majority of people, the majority of analysts and political pundits don't believe there will be a government reform. And if that's the case, and we never do, I think that tells us a lot about our longer term future, because I think we do need appropriate government reform by some administration into the future. So again, that's not about the politics. It's about the observation of nobody conceding, of very few people, I shouldn't say nobody, very few people really conceding to the fact that we could have a government appropriately adjust their spending. And that should tell us a lot about our economic future. So that is the point of this video. If you have questions, please feel free to reach out to us, email us, text us, set up a meeting to have a phone call and discuss this more. Please share resources that might be contrary to what we said, that you want our opinion on. We appreciate you. Thank you for tuning in, and we look forward to talking to you soon.